Very good day to you. So today I'm gonna be showing you a trading strategy that have over 80%, 80 to 90% win rate. Okay. So without further ado, let's get it started. Well, first of all, as you can see, here is my trading instrument. So you could roll with it if you want. Then it's not best to trade numerous trading instruments. You need to get accustomed to the preferred instrument so you can understand its precise and relative move. So let's get started. This is MT5. So here we go. When you open a chart like this, I believe your moving average setting has been placed to 50 EMA, stating the strong resistance Y, which is this one, this red one here. This is my 50 EMA. So oh goodness. Okay, sorry about that. Now your moving average has been set. Okay, this is the 50 EMA, or this is the 14. This is known for the 50 EMA is known for a strong resistance, while the 20 is known for a weak resistance. So that is that. So upon opening your chart, note it should be in the morning at the beginning of London section. Okay, you move straight to the daily time frame, and what do you see? This is clearly an uptrend. It's an uptrend. Then you look out for the candlestick that just formed yesterday, the previously formed candlestick. And what do we have here? This one is a bullish candlestick. Okay, is a bullish candlestick. Upon noticing that this candlestick right here is a bullish one, this one here is a bullish candlestick, you move to your H4. What do you expect to see? Another bullish candlestick indicating the continuation of that move. And as at 7 a.m. this morning, the beginning of London session, this was what happened. This bullish candlestick here. Okay, and after that, what followed? Continuation. Okay, just that I was too busy to take out my profit because the markets ran all the way up. That should be about 30 pips. Okay, so upon confirming the bullish move on the H4, what do you do again? You move to the H1, another confirmation, because you need all the confirmation you can get. Okay, and what do we have? Here it is. You get. So upon entering here, you can see the markets move all the way up here before retracing back here to test this support. Okay, so when analyzing the market, before you even spot all this, you need to check out the zone, because what's really making this market to pull back as of now is this region here. Okay, the push is coming from here. You can see this was a reasonable resistance. When the market was at this region, it went all the way down. Okay, but the good news is the market tested it with this week here, and it came down before it's coming back up again to retest it. So who comes to short? it's gonna get to this point, this 50 EMA here, this year, before all the way up, hopefully to this level. You get my point. So I'm hoping to ride this trend. That's why um I'm still in the market. I didn't trade my stop loss, neither did I take my profits, the one I was running earlier. So now, what do you learn from this? Number one, I used is a should I say a manageable or a standard lot that could accommodate the move of this market. Okay, because it's not about jumping into a trade. I'm yet to set a stop loss for this trade, but this is my stop loss region. Okay, this is it. Worst case scenario is going back, and anything that comes below this, I should be out of the market. Okay, then apart from that, you need to make sure that you're entering a trade at a fair level, at a fair price. Okay, you don't want to be buying at this level. Now let me show you what that means. Come to the H1. You don't want to be buying at this level. You'll not be buying here at the close of that H1 bullish candlestick, expecting it to okay. Anybody that still wants to trade this market, now is a very nice price to enter. As you can see, here is the support. Okay, here you can see the rejection that has been coming in up and down, up and down. The next thing you're gonna get is up. You get, because it's in line with the D1. Look at the D1 here. You can see this bullish candlestick that invalidated this doji, bearish doji here, and there you go. It has break above the 50 EMA and it's going up. Okay, so that is that on how to take a trade. This is a bullish trade. Number one, make sure is at a reasonable area of value that is supporting the direction. That is a buy, is at a reasonable support that is capable of pushing it upward. If it is a sell, okay, let's go for a sell. Nasdaq, I mean a sell Nasdaq. Yeah, so this will have a Nasdaq. Now this is Nasdaq. Me looking at this chart, you can see here is a support, right? Here is a support. Come in. Here is the support. Now at the entrance of this market, this was a bearish candlestick. There was a bearish candlestick here, as this bearish engulfing here. Then moving on to the H1, there was a bearish candlestick here, still indicating a bearish move, though it was a support. Then finally on the D1, yesterday was a very bearish candlestick that formed. Okay, hopefully the market is coming down to this region. Okay, now since I took this trade, the market decided to do a rebound of, but looking at this chart, you see that this is a descending triangle like this. Okay, so what do we get from a descending triangle? It's gonna range. It has retested this angle. It has retested this angle and it's doing this one. It's gonna wave down and all the way down. Okay, so that is the reason, if you could see, I used a very minimal lot size. Okay, I used a very minimal lot size so that it could accommodate the whole noise it's going to make before it sink. I'm looking at this candlestick, is an exhaustion candlestick. Market is just trying to do its final move before it's come back down. So that is that on how to take a bearish execution. Number one, let me repeat, your D1 must be bearish just like this, and it should be at a resistance because you are selling. That's a very nice price level. Then H4 must be bearish just like this one here. Consider as where I enter the market. This is a support on the H4. Mind you, it's a support on the H4. That is why you could see my stop loss is above the ranging zone of that support, knowing the fact that it's going to retest it. There's a higher probability of it retesting this descending triangle that is forming before it wave all the way down. So I've already given that a thought and set my stop loss accordingly. And me looking at the chart, you can see it's already retracing back downwards already. Now the H1 also has to be bearish. Okay, the funny thing about this strategy is that if everything is in check, even if the market hasn't started running in profit immediately, trust me, you have a very higher chance of it retracing back to your direction, unless maybe your stop loss is too extremely tight. And mind you, it's not all strategy, it's not all trade opportunity you're supposed to take. Okay, for instance, this one now, in some scenarios, if I'm not willing to take wait for this whole market to move, I might just stay out of it and wait till the market breaks the support to this level before I enter. Okay, but since I could accommodate any move, I enter with a very minimal lot size in respect to my equity. Okay, you could see, right? Good. So that's that, and you can see the H4, like the USD I told you about. You can see that so it's already retracing. Okay, so that's the best thing about this trading strategy. All you just need to do is master it. And looking at my equity, I started this account it's a 100k equity, and as you can see is 19, and this started trading this account February 1st. Okay, February 1st, and there we have the profit that is already floating. Now you can check out, let's check out the history to tell you how profitable this strategy is. Okay, last month. Okay, you can see it. You can see how it all goes. So all you just have to do is to make sure that you are following this rule effectively, just the way I said it. I will come again. Number one, the trading instrument has to be very minimal. Number two, upon opening any trading instrument, you need to be sure that you are at a fair level. Number one, the level has to be fair, meaning you have to be in line with the trend. Okay. Number two, apart from the level being fair, that is price level being fair, you need to go to the D1, that's the daily time frame, to know what happened the previous day, just like this guy right here. Okay, after that, come to the H4 and confirmed if is in line. If peradventure H4, sorry, the D1 is telling you is bullish, then the H4 is bearish. I think I have a perfect example for that. That was in GBP AUD. Okay, let's look at the H, look at the D1. You can see this is a very reasonable bullish candlestick that formed. Okay, but come to the D1, you will see that it was very bearish and I had no choice than to leave it. Yeah, look at it here. This was it. This bearish candlestick. I didn't get that correctly. Here, this one. It was bearish. Okay, I just have to leave it. And me looking at the chart currently, you can see it's retesting this level. Well, assuming I ignore this bearish engulfing, I see that after the H4, the D1 is saying bearish, bullish, and I enter. What's gonna happen? I'll be running in lows, and it may even come back to this region before it go back up. Okay, so I just have to wait until I see a bullish candlestick on a reversal in respect to the direction of the D1 before I enter. Okay, so as I was saying, you have to make sure everything is in line. Okay, now looking at the H4. I told you anybody that want to jump into this chart, this market, this is the perfect time, and you can see it's already going up. Okay, so that is that. Make sure you ain't over trading. Make sure maximum trade you're just running ain't more than two. Okay, and you have precise and specific trading instrument, just like what you can see here. Okay, and get acquainted with it. Number one, what did I say? Your trading market session is London. You're not like you check out enter the markets in the morning. Okay, then you should be your exit to the end of New York, or once your take profit is hit. You don't want to stay too long in the market in as much as you're in swing trading. And another tip I'm gonna give you for free. You see Nasdaq is a very interesting pair. Okay, it's a very interesting pair, and it will be more profitable for you if you only look out for buy. Yeah, I sell it because I understand its price movement very well, but it will be very profitable for you if you just only look out for buys on Nasdaq. Is a stock, US stock. So that is that. I hope this really educates you and give you a lot of clearance on doubts you've been having. And most importantly, you need to practicalize them. Like I said, London session, beginning of London session, go through all your time frame accordingly and in respect to the levels. Okay, and also don't overtrade. All right, thanks for listening. You can drop any questions below and I'll take care of it. Thank you very much. Do enjoy the rest of your day and happy profitable trading.